morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with Kevin Casey, and today we are joined with Mr. Bill Dallas. Good morning, Bill.
Hey, all. Hey, good. Nice to see you again.
Good to see you. Good to see you. Okay, just a little heads up before we really get rolling, that there's a few things coming up this week that you'll want to be aware of. Tomorrow, we'll have the second look of Q4 GDP, and Thursday's a big one, kids. We are going to have pending home sales and also the Fed's favorite measure of inflation, PCE. So they are expecting the headline to go from 2.6 to 2.4 and the core to go from 2.9 to 2.8. That's what's expected. If they don't get what but if the market does not get what it expects, it throws a temper tantrum. So just be really, really on guard and aware and watching, and don't risk, oh, maybe I can get an extra eighth out of this thing.
I would be prepared for a temper tantrum tomorrow.
Thursday?
No, just I'm prepared for a big temper Thursday when the PCE comes out.
Just remember our little thing. Remember our little ditty? If you see a rate you like, lock it in.
Yeah, do it now.
It's a good time to remember that, right?
Yeah, absolutely. But ahead of that one, I heard an interesting conversation with one of the top guys at Chase, and he was saying, I don't know why the market pays so much attention to an estimate, PCE. The E is for estimate. Why do we even care? And I'm like, oh my God, he must be listening to Audrey.
Well, okay, so my gripe is not with PCE necessarily, but with all of the, the estimates, the prognosticating, and then the fact that they roll out these numbers and they're not real. They're all based on some estimate anyway. It broils the markets, and then we're all SOL for a while, and then they come back and do the revisions, and then what happens? Well, the damage was done, and here we are. So it is, and I mean, yesterday was a great example. Like, we had bond auctions, which nobody was really even paying attention to or listening or thinking about. And the rates just went to HE double toothpicks. And that was because they were auctioning off $127 billion in bonds. Today, we had another $42 billion in bonds be auctioned off, which is, and it's kind of hanging in there. It was last time I checked, like 2 minutes ago. So it could have all gone to again, but hopefully not. So it's like, the rates are the rates, the market is the market, and it's good to be on guard. It's good to know these things because you need to be able to speak to your borrowers. You need to be able to let the realtors know what's going on. So am I a believer in being educated? Yes. But do I get frustrated with fake numbers? Yes, I do. That was close. Don't make things up. And let's go based on facts. Okay, so with that being said, Bill, where I want to start today is I've seen it a few different places that 2024 is the year of the professional. I mean, for God's sake, the fact that we're dealing with the biggest financial anything that most people have, and that this is the first year that we're going to have the year of the professional, is a little terrifying for me, but here we are. So there's a lot of talk about this exodus from the industry and the people who are leaving and what you should do to survive in this market and this next year, and it should be better. But still, there's a lot going on, right? So let's start with LOs. So people are leaving, right? What are you seeing on your end?
Well, I think I yearn for a little bit different strategy, right? I think the cream always rises to the top. You know, you hear all these things. You hear that when the tide goes out, blah, blah, blah. And I think what my view of it has been that there's 3 tiers of LOs, and there always has been. There's what I would say would be the originators and the pros, the top maybe 5 to 10% of originators in the United States. And that group is well-trained. They are consistent, and they do a good job. That group probably today is doing 3 loans a month, right? So they're not killing it, but they're not dead, right? And if you look at that group is probably a couple $100 million, depending upon where they are in the United States, in production. Then you've got this middle group. This group is probably, I'm calling them the LIFO group. They're the last in, first out group in accounting principles versus first in, first out. So the LIFO group really are refi dominated. And that group suffers from relationship anxiety. It's like owning an electric car. You got range anxiety. Well, they have relationship anxiety and they're nervous to actually get outside. They don't know how. They don't have a large database of relationships. So the referral network is very thin and based upon their existing database, right? Or
if they even keep a database, but keep
yeah,
going.
they may not even have a database. They may have been spoon-fed leads from something, right? They either worked in a call center, were very successful, or they were something. And then there's the third group, which is, I'm going to call that group too new to rate. They have no idea what's going on. You meet some of them at events occasionally. They're extraordinarily happy or extraordinarily sad, but they don't do any production.
Mhm.
Right? They just take up space.
Wow.
And I think what you're seeing now is this movement where only the top. So I use a statement that I've used a good bit, which is really, we don't need more LOs.
Right.
We need LOs to do more. And
Mhm.
as a result, I think companies need to quit focusing on just recruiting, stealing, moving, all of that, be more like a broker, where the broker focuses on, I mean, when I was running First Franklin and we started at full retail and I was a top loan officer, not only do I have to produce, and I'm producing, keeping the company afloat, I then have to figure out time to train, develop, retrain, and help assist these folks to be successful. And if you do focus on growing the LO's production, and what I called it at Finance of America, I just called it 2X. My job is, if you come work for me, I will double your production, guaranteed. Right? That's my job. And unfortunately, that's not how most branch managers operate. That it is a little bit how most brokers operate. You come
So
work a broker, right, or a mortgage broker, they are origination focused 100% of the time. They just have to be able to have time to be able to train you, right? And my only job, really, other than my own businesses, was when I got out of college. I was a director of training and development and recruiting for Better Homes and Gardens Real Estate Services, which was a new franchise out of Iowa. Well, we were based in Ohio, and I had a company where I blew it up, basically, right? Recruiting, training, developing, and working on retraining people. But they invested in me. I mean, I knew shit. I didn't know anything at the time, right? I just came out of college. I was playing sports in college and good student and knew a little bit. I didn't know anything about real estate. They helped me get my broker's license. They helped me understand the real estate business, but they sent me to 2 professional places to get professionally trained in sales. Professionally trained in sales.
yeah, that's
right?
Yeah.
Where my language, my presentation skills, my ability to deal with objections, and all of that gave me the confidence to go outside and actually meet a person,
right.
try to
Yeah.
sell them something, right? Versus,
Right.
hey, we just sort of, here's your desk, here's your phone, get off your ass, you're on your own, right?
Right.
It's
I
more
mean,
of,
my experience in the broker world is just go do it. I mean, there was no, it was
Here's
just
your
figure
phone
it out.
book.
It was literally feast or famine, sink or swim, like just figure it out. Like there was no training, there was no nothing. And I look back and I think, okay, there's something to be said for someone who starts their career at an institution where there's structure, right? Where you
yes,
learn the structure and the way to put things together in an orderly fashion and do that versus the loosey goosey, well, if I'm supposed to get this loan, I will. No, like, so it's interesting because I think we have a whole industry full of people who have really lived this into this profession by the seat of their pants.
yeah,
And so now is not the time for that. So
no.
Bill, tell us, what did rates do when you first got into the business? I heard you talking about this. What happened with rates when you first started?
The first day they doubled, so they went to about 20.
Yeah, from
And
9% to 20 is what I
20.
heard you.
The average rate in 1980, 81 was probably 30-year fixed rate was in the high 17s, 18, right? So it was the best time ever. I
Yeah.
was too
Yeah.
stupid to
So
know
it's interesting
anything
because we've
different.
heard you talk about this, we've heard Dave Stevens talk about this, where it's like the rates were crazy and they it wasn't like they were always crazy. They went from lower to much higher, right?
Mhm.
So exactly the environment that we're in right now, that we're all acting like it's very unique and it's never happened before. And when you go back, I always find it fascinating when I go backwards and look at what's happened before.
Well, let's take, for instance, 2003 and 2004, $4 trillion year, biggest year in the history of mortgages originated, purchase and refis, almost equal, but 4 trillion. The average rate that year is probably high fives, low sixes.
Yep.
And they
That
were
was-
arms.
Right.
Yeah.
They weren't fixed,
That's right.
Yeah.
right?
That was
So,
booming those years.
and I think people, my experience today is you've got this direct to consumer world where if they're spoon-fed leads, they'll call people and they'll make these calls, right? And then you've got the slow boat to China people, which are the folks who are in mortgage, who are what I would say, if you gave a person a lead, they want to make sure they get everything organized. They've called Barry Habib, they've got Trust Engine, they've got Mortgage Coach, they've got all these things, and then they're going to call somebody and talk with them.
Right.
And it's too slow, right? You've got all you have to do is, in fact, my goal was to get off of whatever I was doing and make an appointment and go physically meet the person.
Yep.
And if they can't meet me today, I can meet them on Zoom. But I immediately, I mean, if you and I even exchange phone or emails or texts, if it goes more than 2 or 3, I just call.
Yeah.
And
Yeah.
I
100%.
think what has happened is our strength is in our personal relationships locally with our referral sources and our customers. If you don't play to your strength, you're going to get clobbered
Yep.
by everything else.
Yep.
Right. And it doesn't matter what interest rates are. It doesn't matter really what you know. You're on a fact-finding mission, and you're trying to build trust as quickly as you can. And most of that is just by saying, how can I help you? What are the challenges that you're thinking of? And never answer, never answer anything. You answer a question with a question and learn more about what they want to do, what they're interested in. And all of that is just basic selling.
Yep. Just like when you get pulled over by a police officer. Don't answer questions, always answer their questions with a question.
And it's
Wow,
like
that's great advice, Kevin. Thanks for
It
chiming
is.
in. That's awesome.
you have experience in that, Kevin?
Obviously.
No tickets.
Yeah, I think the piece, Audrey, that's interesting is that if you don't feel comfortable in handling an objection, let's just say the normal objection is, in most cases, I want to think about it. Or I need more time. It isn't, hey, you work for Finance of America and they're belly up and you guys are a bunch of doorknobs. Oh, what do you say? Right?
You know what? Here's the reality for the average LO. Our clients don't give a crap who we're working for. They're working with us. I mean, if you have a relationship, they didn't come to you because of where you are. They came to you because you are you, and they know you're going to give them great advice. And so, I mean, the problem is we have so many LOs out there who know how to do one thing. They know how to fill out an application, or more to the point, have somebody fill out an application online, click, click, click through the disclosures. They have no idea even what their clients are signing. They don't know crap. So the borrower's going into it blind, basically. And I see LEs where the borrower's like, oh, I got this. No, you didn't. I mean, let me see it in writing. And then it's, oh, your rate's low, but you're paying, 8 million points. So there's a one size fits all approach to doing loans, which, they keep trying to systematize. And I think you're a fan of systematization, which works to a certain point. But the loans that we have right now, they're not
Out of the
those
box.
loans.
No.
These are not those loans. And so it's interesting because I was reading this, there was an example in one of the articles that I read from an underwriter who got laid off in May of 2022. She was 25 years. She was an underwriter in the business. She got laid off and couldn't find another job. And she was shocked because a year later, she had had a company lure her away, match her salary, and give her a retention bonus. And she wondered what the hell was wrong. And I'm like, I can tell you what's wrong. I have a really good friend who has a list of people who did that, who will never, ever be hired by her ever again because they weren't loyal. And so it's interesting that kind of some of the old school ideas of loyalty and professionalism. I mean, oh, are we kind of finding our way back to it? And then there's
Well,
another,
I
go
agree
ahead.
with you, and think about, so if you're going to spend time on invest time in people,
That's right.
then you want to know that they're going to be loyal and be with you.
Right.
Right.
So what's happened is we've sort of created this churn event of with signing bonuses and with what I call this the whole industry around P&Ls.
Yep.
And I'm just searching for a better place. Well, the companies need to be able to focus on training and developing the existing people that they have. And that has to be their number one focus, not
Right.
recruiting and growing and trying to expand and move. And I think that has got the industry sort of in reverse polarization, which
Mhm.
then makes, so, I mean, do you really need, I mean, obviously we're aging as an industry because most of the people who are experienced and well-trained and all of that are over 50, maybe even 55, right?
Yeah.
So you've got an aging workforce and you need to invest in, in, in the people that you have. And it really is regardless of their age and but their experience level. My goal would be that if you took everybody who's losing money, which is almost everybody in the mortgage business right now, and you just doubled the production of the people that you have,
Right.
it went from 1 to 2 loans,
Yep.
or 2 to 4,
Yep.
right? You solve your issues.
Yes.
Yep.
Yeah. I
And
remember I was at a
they
company
don't.
I was at a broker shop after the meltdown, and we were acquired by Prospect Mortgage. And I remember I was so frustrated because ops was down south and I was up here in Danville. And they decided to go on a recruiting blitz. And I had 7 loans that needed to be in docs, 7. And this one day. And meanwhile, for 2 days, you have every manager, regional, every iteration of someone in management. The office was full of them for 2 days as they're recruiting and interviewing all these people and churning them in and out. Meanwhile, I'm like, hello, I need docs
Oh,
on
that's
7
right.
freaking loans. What about I'm here? And
Yeah.
so I left shortly thereafter. Well, it wasn't just that. It was when the story of how the story of the day that IndyMac went under. I'm like, and, they were wearing that like
Remember
a
that
badge of
day.
honor, and I'm like, "Oh, wait, hang on, we're not a model
Where's
match."
Mike Perry when I need him? Yeah.
To their words, I am not a model match, and, I'm
Well,
out. So
it's so funny because, I think that's the challenge of the existing business. And I've tried to say, I did this thing with Dave on Score in 24, and part of it was get refocused on what you're
yes,
really good at and
yes,
stay there and run that play and keep
Yeah.
running. And I think you can lap the field today if you can invest back into helping your LOs actually go out and build relationships and expand their database.
yeah,
And we're almost like we're attention deficit. We can't stand it because you have to really be focused for a period of time on the lambs that you're sending to slaughter, who
Yeah.
basically know nothing, or they just sit around. I
Yeah.
mean,
well, think about the world
you
we
have to
live.
do something.
Think about how we measure things in our industry. It's all, like bodies and numbers and churn and burn. I mean, you've got a stock market where, these companies are expected to post earning increases year over year that are huge, and they have to get bigger and bigger, and everything's getting more and more bloated. And really just boil it back down to basics and focus on, okay, how many families are you helping? Dave Savage always pops into my head. How many families are you helping? Are you really helping your borrowers get what they need? I mean, I'm amazed. I have a bunch of first time, not for just first time buyers, but people who are lined up to buy houses, and it's an inventory problem for them. They're well qualified, they're great, but I'm amazed at my 20 somethings, early 30 somethings, the people who you think are just going to be all about the computer and stuff. No, they will I love the way they put their questions together, and
Yes.
then they want to get on the phone with you, or they'll get on a Zoom with you, and they're like, okay, we trust that, we know that, you're telling us the truth. So knowing something counts, even with that, even maybe even especially with that age group, because they're smart, they're doing their research. I mean, this is at least the group of people that I'm working with in my area, and I know it's different throughout the country, but I mean, these are not people who just want to push a button and get a loan. They want to have answers to their questions. They want to make sure they're doing it right. They want to understand the process. So I think it's a great market. I love it because whether something, it matters.
Yeah.
So being a professional, I mean, I keep going back to the person who got into the business in 2020, got 5 licenses in 5 states, did nothing but a one size fits all refinance for every single person that they knew, and they're out, not licensed in a single place anymore. Those are not the people we need doing this. So I want this. I don't like this. I'm in, I'm out, I'm in, I'm out. I mean, grow a business where you can survive through the bad times, which we will always have them. And you don't buy Ferraris in the good times. And we just keep elevating our profession. So it's something where it helps the borrower. I feel like there's a complete lack of focus on the borrowers and
So
what
you're
they.
saying I should buy the Ferrari now since it's not the good
Oh
time?
my God. You know what? Why don't you talk to the police that's about to pull you over about that Ferrari? So
No,
anyway,
you just have to ask the right questions. You have to overcome their issues. And this just the same thing as what I'm looking for when I'm talking to a real estate agent.
all right. Yeah, exactly.
You know,
Exactly. So,
I
so
I wanted to share something real quick just on what you're saying. One of the I even mentioned his name, Dean Rizzi is a top producer over at Guaranteed Rate. I was an office mate of his for a while, and he said to me, it was during the '08 debacle, and he said, you can never control the rates. All you can ever control is adding to your database a list of people who know you, love you, and trust you. And
yeah.
that's all you can focus on, and that's how you grow your business.
Yeah, we're one of the few industries, it's well said, because we're one of the few industries that you basically work all month to almost eliminate your pipeline.
Yep.
And if you're not balanced to where your day is at least 50% of the day is spent in the presence of prospects, and the other 50 is spent, nesting your loans. But we are a group of, we sit on these eggs, and we sit and we lay them and we sit on them and we sit on them, and then we have LOAs and everybody else. I mean, look, the opportunity is, if you are not in the presence of a prospect every day, or a potential prospect, right? And you're not asking, either send me a referral or give me something, a client, or how can I help you more, or what can I do? I mean, and I think the top, going back, right, the top 5 to 10% do this fairly religiously, right? And
Yep.
then you've got the 90% that's sitting over there going, what happened?
I wish the rates would
And
go down.
we've got to, and I mean, I was at Momentum Builder these last couple of days here in Vegas, and then the last few days I've been at ABS West. So you've got the product people in Wall Street in one group, and you've got the mortgage people in the other group, and they're in different hotels. It was interesting, right? Because the conversation in one are products, things that you're trying to discuss, and then on the other side, it's all the things that you can do to increase your database, blah blah blah. It's interesting that they both suffer from the same lack of sales training, in that they aren't meeting new customers. I mean, when we're all together at Momentum Builder, you're better off, I mean, being at a real estate event, right? Not in an event where there's scads of mortgage people looking at each other going, oh my God, what's happened?
Right.
And I always thought that was interesting in that we need to go, meaning if you don't know where anybody is, I used to train all my realtors by just taking them to the mall. And we'd start on one end, and I said, I want you to develop one customer as we walk through this mall. So you have to walk up to somebody who you don't know
Oh, wow.
and say something. Good luck. And it was, you know, it's either feast or famine, right? But you deal with your call reluctance by trying to understand that you can do this. Not, holy shit, what am I going to say? Well, yeah, what are you going to say?
Right.
The problem.
So I thought that, so again, I heard you speak somewhere else, and you had a list of things that you thought were important in 2024, and I thought some of them were worth mentioning. The first one you thought was important, and you were using football analogies, was don't lose money. And
Yeah.
so you thought that was a touchdown
That's 6 points. That's at least
suggestion. Yeah, it
6.
was right after the Super Bowl. Don't lose money. I mean, one would think that is obvious, but it's been a little difficult. So, and then you had said focus on adding value, which you were just talking about, and building relationships. I mean, building relationships, building relationships. We've been talking about that. We've been doing this almost 4 years, and it's, you know, first we were locked down, and then we weren't, and then people didn't want to go build relationships. They thought they could just wait, you know, just sit at home and build and do everything fine there, and that is
Let me
not
stop you
it.
here just to think about it, right? So
Yeah.
if I'm a mortgage company and every day you came in as a loan officer and I had leads for you, I'd set up appointments and you knew who you were going to go meet today
Yep.
from 9 to 5. And I had other clients I wanted you to call, past clients. And I had that all set up for you. Would that be good?
Yeah.
That'd be
It's not
really
my
good.
style, but yeah, okay, yes,
And
I guess.
instead, we don't do that. What do? We offer a rate sheet or some way that you can log on to Loan Sifter or some stupid thing. And all we do is we turn on the TV and we see where interest rates are. And we talk about how bad interest rates are and what things are happening. That has nothing to do with the business.
That's
The
right.
business is you should show up with a full list of things to do today that
Yes.
put me in the presence of the prospect. And your company should be really focused on creating leads for you that you could lean on to actually create relationships or other relations. That's it. And if you don't feel comfortable in being able to meet with a realtor or meet with a builder, a financial planner, an accountant, a CPA, an attorney, a corporation, or the Chamber of Commerce, or an existing investor, or somebody else, then I need to train you into what you say, how do you handle yourself, how do you make a presentation, how do you talk about the company itself. And because basically they never ask you, I mean, clients aren't interested in lowering their payments, doing some life event that has hit them, right? They either are trying to buy a new house, if they're a new first-time home buyer, you know. And so if we're stacking up people, how do we, Audrey, if you got a bunch of people lined up and there's no inventory, let's go work with them to find inventory.
Yeah.
Right? That's it. If we had to, what streets are you interested in? I mean, I walk people down the street, knock on the door and say, are you interested in selling your home? Now, I've got a buyer right here who's interested in buying something. Next.
Yeah. Well, we talked, you know, it's interesting because I was talking to an escrow person yesterday, and they said that most of their business is probates, trust. It's people who have either died or, you know, like the older people are finally, I'm like, you really? Like,
Nice
that's
niche.
interesting. But yeah. Anyway,
Niche is in the niche.
We had an MSA group that we created with a firm, and the firm specialized in divorce.
Yeah.
yes.
So there's 2 transactions there potentially.
Yeah,
Yes,
exactly.
there are.
So,
maybe even a third sometimes.
Mhm. Clear, if you got to sell the existing.
well,
Mhm.
I find it interesting because, like, I've got some things going on where, I mean, Kevin and I were joking yesterday that we're like, the king and queen of cross collateralization because, I mean, are people doing these because they work? Like I've got investors who are buying places, crossing with other places until, to get in with not a whole lot of out of pocket money. Then
Yeah,
they're
I
going
have
to
one
sell
client,
that place and we're going to buy
zero
another
down
place.
on the
Then
purchase.
we're going to refinance these other two into out of those hard, private money loans. That's 4 loans in a year.
Yeah.
4, right? I
Yeah,
mean,
no, I have the same thing. I have a client right now. We're going to docs this week. They came to me. They said, we'd love to buy this property, but we don't have any cash available. I'm like, well, you have this other property that's got no loan on it. Why don't we just cross collateralize too? They're not literally not coming in with any money to the closing costs. And they're buying an
yeah,
investment property that'll spew out income for them.
yeah. It's really interesting if you get out of your head and get out of the idea that I can only do this one kind of loan. So to your point, you had made the point previously, learn other loan products. Well, yeah, there are other things that people need other than a 30-year fixed that is churned out by Fannie Freddie. And so become familiar with that. We talk about it every single week. We talk about some weird thing or some interesting thing or some other thing. So anyway, yeah,
The part of
to
it that
summarize, yeah,
Yeah, I mean, and clients are two types of clients, right? I said this before. You've got what I say are mass non-affluent, and then I only use two, right? I try to neuter all the color, creed, religion, everything else, and just say I've got mass non-affluents, under $100,000 of income, under $100,000 in assets, and I've got affluent people. I've got two different structures, right, of people that I talk to. I
okay,
have to have a strategy to deal with the first time home buyer,
Mhm.
basically, and the people that we're trying to get on, build sustainable
yeah,
wealth, stay connected to them forever. And then this client that has something, like you just said, Kevin, and they want to do something,
Right.
right? Both are interesting. How you do it, right, just becomes um, really your expertise, right? And how you convey it, because my experience with it is that I'm trying to, what I try to work with an LO is say, okay, let's just dream here a little bit and say, if I could exponentially create a large database for you, how could we do that faster than one client at a time? Let's just
yeah,
dream. And so that led, and I did that for myself. I moved from Ohio to San Jose and knew nobody.
Wow.
Nobody.
yeah,
Zero. I'd never been to California.
yeah,
And
Wow.
wow,
when I started working in real estate, I was going to run a company. The guy who hired me got fired the day I arrived.
Oh.
And I went,
whoops,
man, I just moved from my small little town to San Jose. I didn't even know it existed. And so what do you do, right? And so mine was, how do you figure out, I think, and that's what loan officers need to do.
that's right,
And interest rates are going up. I got to know the realtors. I got to know property. I've got to know referral sources. I got to meet business people. I just introduced I went to the mall at the Pruneyard Towers. If you're familiar with San Jose, I went to the Pruneyard Towers and started giving my card to businesses. Then I went down Bascom Avenue and started one side and another side and just started talking with people. I was inundated.
you were
Wow.
what?
I had so much business,
Oh, and inundated. I was like,
inundated. I
I
could not.
literally thought I heard you say you were in undies. I'm like,
No,
that
that
couldn't be
actually
that.
might have been a strategy.
Could have been. I mean,
And I met mortgage people,
right,
right? And they were sitting in there playing Scrabble.
Yeah.
If you were
yeah,
at an SNL back then, you weren't doing anything. And if you were at a credit union, you had nothing to do. And if
Mhm.
you were, the only thing that was working was hard money lending,
Yep. Kind of like
right?
now.
So how do you do that? So I think when you look at this market, the opportunity is the greatest it will ever be
yeah,
because there's very little competition.
Yep.
Right.
Right? When rates are dropping, and that's what I told my businesses, we are not going to, as a private lender, I'm never going to be able to compete with Bank of America, Chase, Wells,
Nope.
and any
Kick
of the
our
bigger
ass every day.
players, strategic players in mortgage. They will always take share when things are
Yep.
good. When things are bad, okay, now
Right.
it's time we can take over at that point.
I'm also amazed, though, in my conversations with people who work at those institutions at how small their box is. And even though, and it's smaller than the bank makes it in some situations. I talk to people who will not talk to a self-employed borrower. They will not do an FHA loan. They will
Everybody's
do
self-employed
anything that
eventually.
deviates outside of the wham bam, thank you, ma'am. Like, let's
No,
get those W-2s and pay stubs and close.
well, and I've spent, you know this, right? So I've spent a bunch of time. I think if you think about what's wrong with mortgage, right? We are tethered to a agency, owner occupied, primary occupant, old guideline business.
Yep.
So it's very hard to innovate, right? Because we all have this 30-year fixed rate, Fannie, Freddie, Jenny business. Well, all the opportunity in lending is that the customer is radically changed. There's many other financing options, from personal loans to, peer-to-peer lending. You've got thousands of business lending options today that you didn't have. But if you look at the single family residence out and just stay there, what's happened is that we are no longer primary occupant driven.
Right.
And we now have investors, second homes, all kinds of different properties. And the existing property that we laid our eggs in is now multi-use, right? So your single family residence is now used as your office or your primary home. And in most cases, it's rental income of some sort for you. So you're getting roommate income or something. So it's an opportunity. And I think what we've missed, and that's what I tell most loan officers, is there's going to be a fairly large collision at the purchase shop over here with the realtor, because everybody knows that. But what you need to do is find investors who buy homes, private investors and people that own homes.
Yep.
You need to become an expert at that.
Yep.
And you need mixed use, other uses. And what is really growing in this market is really investor. And I think what people have missed is non-QM, because of the underwriting nuances that you have to add back into your agency business in some way. And our goal has to be as a company is, how do I build a sustainable set of underwriting guidelines that give people income?
Yep.
And we actually build a set of guidelines that give people obligations. And we give them a shitload of obligations. And then we actually find other obligations. I mean, even if you're just thinking about, okay, what's a first thing a first-time home buyer is going to do when they buy a house? Is they're going to spend money at Home Depot?
Right.
Yep.
Right. So, but no, we can't use. What if they actually go down and buy a car? What if they actually do something else? Right. So our obligation focus came out of 06, 07, and 08, because we got really laser focused on, holy shit, we've given a bunch of people income that didn't exist. And then we calculated their DTI wrong. So we're going to put a bright line onto debt to income. And I'm telling you, you have income, mass non-affluent people who are income earners. And then you have people who are asset people. And you need to underwrite them differently.
All right. So let's take a little dive, shall we, into equity share. Kevin and I have been taking a dive into it, and we are becoming more and more enlightened by the day. And I'm really interested in having now that I know something, I don't know a lot, but I'm learning.
But
And
enlightened is a good word for it, because I think mind blown is a better word for it.
yeah, it's really
Yeah.
because my first knee-jerk reaction, the first 30 times you brought this up with me, I was like, absolutely not. I don't want to, like, I hate the idea, right? And I think that is not an unusual reaction from what we have found, right?
Different
But
from our 30-year business.
the
Yeah.
more that we're finding out about it, the more we're thinking there might be something to this. And so let's talk about that for a minute, shall we? So we're seeing more and more companies that are coming out with, or we're hearing of more companies that are coming out with products. Some of them are modeling them more like a real estate, like a normal real estate transaction where they're following trend and they have a deed of trust and they have guidelines, they're underwriting, they have DTI requirements, etc. And then there are the other ones that are a little less like that, where
They're
or
basically
a lot
purchasing
less
a
like that.
percentage of your house.
Yeah, basically. Well,
Loan
they're
or
all taking a
lien,
percentage of your
right?
house. So anyway, so tell us why you got interested in this in the first place. Let's start there.
Well, I started in reverse, right? In mortgage at
Right.
reverse, right? So if you're our reverse investors at Finance of America, we're the dominant force or one of them in reverse lending. So I've got a host of investors who securitize, understand HECM, FHA loan product, and they understand jumbo reverse. That is a non-payment, a no payment industry over 62. Right. So that led me to a product that we created at Finance of America called Equity Avail, which is an IO for people under 62 that could then maybe move into a reverse. And we created that product. Still exists. Very few people do it.
Equity Avail.
Equity Avail, right? Because if I have a bunch of equity and I'm under 62 and I can't do a reverse, what do I do? Right. And you think about that. And so that led us to equity sharing, which has always been around. It's just nobody had ever done it
Right.
well, right? And you know why? Because there wasn't any equity.
Yeah. But now there's a lot.
Now there's a shitload of equity.
I did an analysis of my database and went through like a whole, all the years back of loans in my database. And the amount of equity that each person has is
Unbelievable.
The average is about $300,000.
So,
Yeah.
It's
Crazy.
gotta be more than that, Kevin.
and I'm going to just stay here. So I think the biggest opportunities in 2024 are going to be an emerging purchase market when as rates improve and listings improve and there's more inventory. I think the second piece is investors who are still buying and they want to buy and they want to flip, right? They're flippers.
Yep.
Then I think you've got this third component, which is cash out. Everybody wants cash out.
Yeah.
Right.
Yep.
And we suck at cash out. The mortgage business is a purchase rate and term business. If you want to get cash out or do a non-owner or do a condo or do something other than a single family, the agencies hate that stuff.
Yeah.
And they'll do them, but they penalize you and do a
Yeah,
bunch
big
of
time
so
penalties.
if we look at cash out, the big opportunity in 2024 is cash out. So
Yes.
why would you not offer consumers a no payment option?
So talk to us a little bit about, how do you wrap your brain around, you don't get to take all the appreciation going forward. Like some of the models are interesting
different.
and, like walk us through that.
So there's two. So they call the industry, it's emerging, right? So you've got
Right.
companies, you got some consumer direct companies in San Francisco area, pretty much, that have come out and do this, right? So you've got Point, Unison, Home Tap, and a couple others that are in the space, and they all have a little bit of different take on the product. What is emerging is that we're getting rating agency approval.
Yes.
So DBRS, we've worked with rating agencies to rate these. They're rating them like they would a reverse security. So that gives you we've got some experience with reverse, right?
Right.
The investors that are coming, think about the investor that's going to invest in this. This investor is probably an insurance company, not a mortgage thing. Mortgage people are used to loans.
Right.
30-year loans that
Yes.
pay and they pay back. So we are interested in default and severity and risk and FICO scores and LTV and all this bullshit that comes out of that. And then you've got this industry, which is more interested in equity.
Right.
Right. And you and I think anybody in mortgage would say, if we had $1 million to lend, if we could lend it at 50 LTV and get a 15% return, we would do that. Right?
Right.
Now, let me ask you this. If you had $1 million, would you do a FHA first with a DPA second to a first-time home buyer with a low FICO and put them into a house at 102%? Would you guys put your money up for this dude?
No.
No.
I want to say yes, but the answer
No,
is
you
absolutely
would
not.
It's zero. It's
Zero.
no chance.
Yep.
I'm going to take everybody in the chat room and we're going to take a collection. There's nobody that's going to put the money in that deal.
That's right.
Now, you might put the money in the deal if you said the government's going to guarantee it,
Right.
right?
Yeah. Right.
But
Right.
the coupon difference. So at the end of the day, you've got two customers. The customer that's going to avail themselves on equity out with no payment is a person that has assets, not income. The person that
Okay.
has income,
A lot of that.
they're going to try to do a HELOC at 12, at
Right.
8, at 6. Prime's 8.5, you guys.
Yeah, it's crazy.
Yep.
Right? It's crazy because we
Yes.
think our interest rates. Think about prime. Prime is always lower than our 30-year fixed rates until now.
Yeah.
We're complaining. You
Right.
are getting a better rate than
Than the
every
prime rate.
business on the planet.
Yeah.
And we're bitching. So what I would say is so the first thing, the industry is called HEI. So it's a home equity instrument. And the home equity instrument is either a lien where you bring on an investor alongside you, or a loan where you now have a lien that's recorded against the property subject to some repayment provisions. And in most cases, the equity sharing industry just records a lien on the property, and there's some sharing, whether you share equity
Going forward.
just grows, or you share the whole amount of the equity of the property with the consumer, is one question that the consumer needs to ask. And the second is, on the equity part of it, is how much do I share? Right? Am I sharing equity appreciation? And then the third question is, what about the downside? What if do I ever have to come in with money to this investor? Right? No, is generally and what happens. But we've had to fight through this with title, because it isn't if it's not a loan and it's a lien, then and I'm just adding an investor to title, what do I need?
So wait, so there's no
From a
lien.
disclosure standpoint, you guys are we're so TRID focused.
Yeah.
It's like, holy shit, how do we,
No trade.
what do we do? How do we get paid? What do I get paid? Do I have to charge points? So there's all of those things that are atypical. But I can tell you this, the companies that are doing it are killing it.
Really?
Yeah, we're
The
hearing some
consumer
pretty,
likes the product.
pardon me?
The
The
consumer
consumer
likes the
likes the product.
Interesting. Yeah, I am currently fascinated, and we're going to continue figuring this out, because it sounds like it is another opportunity to help borrowers and for us to have some business, and that would be a win-win. Yeah.
Well, I look at cash out, and if I'm building a mortgage company, right, I want to be built for agency and non-agency, for markets, right, and for opportunities, jumbo, bad credit, other things that the agencies don't do. So if we think the agencies basically do purchase, owner occupied, SFR, first time home buyer, high LTV, subsidized lending, then you have to build things for which they don't understand, which is a lot of cash out.
Yeah.
And investors. Investors are 40% of the origination market today. And most of my mortgage banks that I consult with don't do shit with investors. They don't even understand. They don't have non-owner occupied properties. They don't have mixed use lending. They don't do anything.
Right.
Right.
Yeah.
Why? Because they're used to doing a government thing. So build and HEI is just a way of cash out. So if I think of cash out, the first thing which would be nirvana to all my clients would be no payments. I
Right.
want no payment. I mean, who wants a payment? Nobody.
Right.
So your borrower is going to go like this. You got income borrowers and asset borrowers. I'm going to say it in a P&L. You got a balance sheet borrower, one who's got an asset, and then you've got an income or P&L borrower who just has very little assets but got some income. The equity share cash out piece goes, I think, reverse, HEI, no payment. Then it goes to a second, generally a closed-end second. Then it goes to a HELOC, and then it goes to a refi.
Refi, cash out.
That's your palladium of cash out.
Yeah.
You have to have products that do all of those, and we don't. Every company that I work with suffers once it goes out of the box of an agency thing.
Right. Right.
And
I'm a big fan of getting outside of the agency box at this point because they've made it extremely clear that they're not interested in most of our business.
the different mission than
yeah,
what you
well,
think,
yeah,
right? The mission, go online and look at the mission statements for Fannie Mae and Freddie Mac. Forget Ginnie Mae because you can't even find Ginnie Mae. I don't even know where they are, right? But at the end of the day, if you look at those mission statements, they have radically changed over the last year and a half.
I read the mission statement for FHFA on here once, and it was a few years ago. And it's interesting how it has definitely been, they've definitely shifted focus.
And
That's
I know we got to probably run, but the other thing is go to CDFI and read
yes,
the mission statement for Community Development Financial Institutions Fund and your certification and read what that says.
Yep.
And then now you're in the real world, right, of finance. And so you're looking at how do I provide products
yes,
for LOs who need to talk to income and asset by M&As and A's.
Mhm.
And how do I give them a palladium of products that actually work?
yes.
Right?
A
Because like you
palladium
were
of
saying,
products.
yeah, because Kevin, like
Palladium.
you said, or you don't know, the first customer that comes up to me will be, if I when I talk to businesses, the first thing the customer said was, I'm self-employed. Okay,
Yeah.
great product for you.
Yeah.
That's great.
And really, I suck. I just started my business.
Yeah.
And I need money. Well, I have a product for that too. I have a business loan, right? Well, and if you want to go to personal loans, you could do that as well. You just have to be licensed and understand that market. But I think most loan people aren't like we are, right? Where you've been like Dirk's on here and Kevin Buddy and RJ and people that I know, right? These are all established, smart, thoughtful mortgage people.
Yep.
Who know what the heck they're talking about.
Yes.
And I think if we add HEI and a couple other things to our queue, we can be really successful in 2024.
Yeah.
Instead of don't just hitch your wagon to the Fannie, Freddie, Jenny thing.
That's
Yeah.
right. 100%.
That's what 90% of LOs do, though.
They do.
If
Yeah,
they're
well,
one,
Because 90% of the companies have no freaking clue of what we're talking about.
Yeah.
well, and then the companies that are set up where you're really, if you're an LO and you're working there, you can't go outside of what they offer, and that is unacceptable.
You want to be able to broker and bank, and you want to be able to have access to,
Yes.
I mean, look, authenticity, because there's nothing more frustrating than taking an application and doing all the work and then being led down the primrose lane and it doesn't fund and your investor sucks and you can't, so most of what we do is try to find authenticity in the actual funding source. Then you try to actually make sure you guys can package a file and gather what you need. But at the end of the day, almost every loan today is an exception to a guideline.
That's right. That's right.
So
But the beauty of it is,
how do you making exceptions is the key to lending.
yes, because we're not a one size fits all.
Yeah.
And
Say
so,
no. And if you have to say, like I said to RJ one day or to people in TPO land, the best thing about an account exec is if they can just say no. The worst account execs I had in TPO land were people that just, I can do it. Maybe look.
Well, they would say yes, and they get all the way to the end.
You have to be able to say there's no freaking way we can do this deal.
I want a rep who's going to say, I will try. Let me go see if I can. And then beats the shit out of someone, excuse me, so that they can see the way, the truth, and the light and get my loan done because it makes sense. They're going to pay the money back. That's what I want. Come on, Bill.
Your job, Audrey, is to give me enough ammo in that customer to actually fret the guideline. Which
absolutely.
So when I start with people about creating proprietary guidelines inside their company, the first thing I do is say, let's get all the underwriters together. And I want a list. I want a list of the stuff that you guys think is stupid. And so I start there and I get a list of, when I did this at Finance America, I had a list. It was like this long. And there are so many things. I said, you know what we're going to start? We're going to start by not doing any of that shit.
Thank you. Appreciate
and then on the right side, I said, these are some things that we want to add to how we can add income to our consumers.
Yeah.
Yeah.
So
the bottom line is,
the crap out of everybody.
I wish we could just go back to, Cam, will they pay the money back?
Well, that's why I like HEI. That's why I like investors on this side basically just want to know that they're going to get, they want yield, obviously, right? A higher yield than agency, but they want to know that there's a snowball's chance that this thing's getting repaid.
Yes.
I like that business. I've always liked it.
Am I going to get return on my investment? Am I getting my money back? Really, all the other stuff is a bunch of minutia as far as I'm concerned. Okay, I just want to see if you have any way to weigh in on this quickly, because insurance is becoming a bigger and bigger issue all over the country. And I caught this article that the headline was how tech could save insurance. And it's talking about insurance companies who are doing really innovative things like, they'll put a meter, like if you're in a flood zone,
water meter,
literally have like some sensor somewhere where once you hit 8 inches of flooding, they pay out a certain amount of.
Once the meter doesn't read because it's flooded.
Oh my God! Don't even get me. Trust me, that's
the battery died.
Hey, I went out to dinner this weekend with a guy who used to run WMC mortgage in the old days. He's moved here. We go out. He's in a Tesla, and he said, "I've got to drive. I got to drive really good because it's got me on a meter, and I'm paid my insurance rate changes almost by the hour based upon how I drive."
Well, consider Tesla owners have almost eclipsed Prius owners as being told they're the worst drivers out there.
That's because the Prius drivers are selling their Priuses and buying Teslas.
This was just, but the challenge
so much trouble
for a car business, right? Insurance companies are leaving California. They're leaving states. They're leaving real estate. They've gotten crushed. So I think one of the things, the two things that I would say to that are you have to have multiple insurers available.
Yeah, big time.
Any property that you want to try to get done today.
Yep. You got to have a good broker, number one.
Very good. And maybe some non-traditional sources that would not require all of the, like, for example, I've got 7 units in Los Gatos, and it's constantly being, I mean, I've owned it since 1986
God bless you.
and never had a claim. And I bet you it gets canceled about every week now.
Oh,
because-
wow. See,
Because it's
that's,
in Los Gatos, it's older, blah, blah, blah.
Yeah, I got turned down on a loan in Los Gatos last week because the lender said it'd be too hard to insure.
Yeah, I think so. Insurance, I guess my point would be, look, in the old days, we were PITIMU, maintenance and utilities. And I think you're going to return to that a bit. I got a feeling.
yeah,
Is that because most of us have just, the newbies are all PITI only. We don't really talk about,
yeah,
we make an estimate, but Christ's sake, if your insurance is going to be canceled at a minute, or you're in the middle of a tempest, or you live on the edge of a cliff, or you're close to the ocean, or you're in a fire zone, or you're over here, it is unbelievable the amount of trauma that the lack of insurers in several states
Yeah, it's bothering.
can
Terrible.
really wreak on each of you.
yeah.
Right.
Well,
So-
it's not just
Is-
several states, it's all over the country.
Well, and I think for when I look at it, trying to do what's right for the customer, I think what we should do is overestimate maintenance and utilities, because those two things are going to cost them a lot more than it used to.
Yeah,
Yeah.
no,
Water,
it's happening. But I
lights,
think my,
electrical, heat, insurance, those things on big houses and things that are older are going to be a lot higher. And we don't take that into consideration, right? We do inspections, but we don't really take inspections and say this equals dollars
yeah,
that's going to cost you
yeah.
monthly or annually.
Well, my point for mentioning this is I feel like we're in a position where I think insurance is going to really change. I
It
mean,
is.
really change. And I
I-
want everyone to start thinking about it, being ready for it, prep your clients for it. And I was the person before the meltdown who someone would be buying some sheetrock mansion somewhere. And I was the one going, have you thought about what your PG&E bill is going to be as you're, having to turn on the air conditioning, you have no insulation. But anyway,
Yeah,
so things are a changing, kids.
Yep,
Okay.
gotta
Oh
run.
God. Okay, Bill.
So
That's
sorry.
it.
I always do this to you guys, but
Ah,
I
well,
make it, I think we got to be prompt and on time, but when we're ending, we should always let it go a little bit longer.
all right. Well,
We
we
begin.
thank you very,
Thank
very,
you,
very
guys.
much.
Love you, Bill.
And
All
we
right.
are so grateful you were here, and we'll look forward to seeing you again.
Dude.
Mwah.